One of its main business suddenly faces, well, a major shakeup. Today, we're doing a deep dive into Dreamfolks Services Limited. You probably know them as India's biggest travel and lifestyle service aggregator, and we're looking specifically at their Q1 results for fiscal year 26. Our mission here is pretty simple. Cut through the jargon, pull out the really key insights for you from their latest reports. We want you to understand not just what Dreamfolks is up to, but why it actually matters for them and honestly for the whole travel and lifestyle scene.
Yeah, it's fascinating because you've got a company that's really at a crossroads. They're showing some impressive growth, sure, but they're also in the middle of this pretty significant strategic shift. So this deep dive should really shed some light on how they're, juggling both things at once.
Okay, so let's jump right into the headlines then. The numbers. Dreamfolks kicked off FY26 looking pretty solid. Revenue came in at 3,489 million. That's up 8.8% compared to last year. A decent start on the top line. But I think, like you said, the really interesting stuff, the bit that tells us about their underlying health, is profitability.
Absolutely. Because it's not just about bringing in more money, right? It's about how efficiently they're doing it. Their gross profit, that's revenue minus the direct costs of providing the services, jumped up 24%. That's 466 million.
24%. That's quite a leap compared to the revenue growth.
Exactly. And even better, their profit after tax, the actual bottom line, saw that same 24% jump. It hit 213 million.
So the margins must have improved quite a bit then.
They did, yeah. Gross profit margin went from 11.7% last year up to 13.3%. And the PAT margin, the net profit margin, climbed from 5.3% to 6.1%. These aren't tiny little bumps. It suggests they're operating more efficiently, maybe getting better pricing, or perhaps the mix of services is improving. It really points to strong underlying health for the quarter.
Right.
And to give you a sense of scale, we're talking about 2.58 million passengers using lounges through Dreamfolks just in Q1.
2.5 million. Wow.
Yeah, and their net worth also saw a really healthy increase, up 26.6% year on year, hitting 3,223 million. Solid foundation.
Now, for ages, Dreamfolks has basically been airport lounge access in India. I mean, over 90% market share for domestic card programs, 100% coverage in Indian airport and railway lounges. That's dominance. But now they're explicitly talking about a pivot, moving beyond just lounges. So what does that actually look like? What's this strategic shift really about?
Yeah, that's the million-dollar question, isn't it? It's really the core of their forward-looking strategy. They want to move from just being a lounge aggregator to a much broader travel and lifestyle experience platform. And what's really striking is they're now saying that these non-lounge services, they expect them to contribute about a third of total revenue.
Oh, third. That's huge.
And they said quicker than they originally thought. So the momentum seemed to be building faster than planned.
Okay, faster than expected. So for you listening, the big question is, what are these other services? When they say non-lounge, what are we actually talking about?
Right. So they're seriously branching out. They still have their big lounge network, over 850 international touch points now, which is impressive. But the really eye-opening number is the 3,000 plus touch points for these other services.
3,000. Okay,
Yeah.
Give us some examples.
Sure. Think about things like booking golf games or lessons, airport transfers, getting you to and from the airport smoothly, meet and assist services, access to like social clubs, even simpler things like grabbing a coffee at a mall or spa and wellness options. Highway dining, too.
Huh. So it's really about plugging into different parts of the journey.
Exactly. They're trying to cover the whole trip, basically from your doorstep through the travel itself, and even stuff you do at your destination or back home. And they mentioned that a lot of these newer, more premium services are actually getting really good traction already.
Right. So it's identifying those little pain points or desires we have during travel or even just daily life and offering a kind of seamless premium solution, like an easy airport transfer or, yeah, a decent coffee without hassle. Makes sense. And I'm guessing there's a financial angle here, too, beyond just customer convenience. For dream folks, I mean.
Oh, definitely. Strategically, they expect these non-lounge offerings to come in at, and this is their term, a slightly better margin than their traditional lounge access business.
Okay, slightly better. That's interesting.
It is, because that's a key lever for boosting overall profitability as they diversify. They're not just adding revenue streams, they're aiming for more profitable ones, capturing more of your spending across that whole lifestyle journey.
Okay, let's shift gears a bit. There was some news in their report about clients, specifically banks. They mentioned quite directly that certain programs with two big ones, Axis Bank and ICICI Bank, were closed from July 1st, 2025. And they said the impact is likely material. That word material always catches my eye. It sounds pretty serious. What does closed actually mean here? Is it a complete break? And how big could this material impact actually be?
Yeah, that's a really important point, and the company did provide some clarification. What they stressed is that the main contracts with Axis and ICICI haven't been terminated. It's not like the whole relationship is gone.
Okay, so it's a specific program.
Exactly. Certain programs, or maybe benefits tied to specific types of cards, those have shifted away from Dreamfolks. But crucially, other programs with those same banks are apparently still active. And Dreamfolks says they're talking to them right now about integrating these new diversified services, the golf, the transfers, all that stuff.
I see. So it's a setback on the lounge side with those specific cards, but maybe an opportunity to upsell the new stuff.
Potentially, yes. But the material impact likely refers to a noticeable hit to that core lounge access revenue from losing those specific programs. It's definitely a challenge they have to navigate.
And you mentioned earlier this isn't happening in a vacuum, right? There's a wider competitive thing going on.
That's right. It seems this shift is partly driven by a bigger trend where the airport operators themselves are getting into the launch aggregation game.
So direct competition emerging right where Dreamfolks used to dominate.
Pretty much. It kind of validates Dreamfolks' strategy to diversify before this became a major issue. They sort of saw the writing on the wall.
So what's their counter move then, besides trying to integrate the new services?
Well, they're really pushing hard on a couple of fronts. One is shifting the model with banks away from just pay-per-use lounge access towards like broader membership packages that bundle multiple benefits, create more value. And the other big push is building what they call sticky, high-retention revenue streams,
Meaning?
meaning onboarding more enterprise clients, companies in travel, lifestyle, tech, who will embed Dreamfolk services into their own customer offerings. They said they added over 40 new enterprise clients just in the last year. So diversifying their client base beyond just banks is key.
Okay, so if the airports are encroaching on lounges, Dreamfolks is expanding outwards into a much wider service ecosystem that airports probably can't easily replicate. It's like changing the battlefield.
That's a good way to put it. And they're not just doing it in India.
Right, you mentioned international expansion.
Yeah, they're specifically targeting Southeast Asia and the Middle East over the next 5 years. They see big potential there for this broader service model.
Managing all of this, thousands of new service points, new client types, global expansion, that sounds incredibly complex. So how are they actually pulling this off? What's the engine driving this? What about their technology?
Yeah, that's the crucial underpinning, isn't it? How do you manage 3,000 plus touch points across, 100 plus countries? It's a huge operational challenge. Dreamfolks is apparently making a big investment in their tech. They're building out a flexible, customer-focused platform using a, quote, lean tech stack.
Okay.
It's an in-house proprietary system. And the goal is to let users, or rather the clients like banks and enterprises, create personalized service packages for their customers. It needs to integrate all these different services, old and new, seamlessly in real time.
So a bank could use this platform to offer, say, lounge access plus an airport transfer plus maybe some dining credits, all bundled together for a specific cardholder.
Exactly. Through different channels too, physical cards, apps, kiosks, whatever fits the client's need.
And you mentioned something about fungible models. What's that about?
Right? Fungible and spend-based models. That basically means offering flexibility. Instead of just a fixed benefit like 2 lounge visits, maybe it's points that can be spent on lounges or art transfers or coffee, or maybe benefits that scale up the more a customer spends.
Much more customizable.
Yeah, it allows them to offer a much wider range of choices, cater to different customer segments more effectively. This tech platform is absolutely vital for them to scale up these new enterprise partnerships and handle the global expansion. Tech is really at the heart of this pivot.
Makes sense. And speaking of continuity, it's probably worth mentioning that their chairperson and MD, Mrs. Liberatha Kalat, has been reappointed for another 5 years. That's from Feb 2026 to 2031. So stable leadership during what sounds like a really critical transformation period.
Definitely. Having that consistent leadership vision is probably quite important when you're making such fundamental changes to the business model.
So we've talked internal strategy, tech, challenges. What about the bigger picture? Are there market trends helping Dreamfolks along? Any tailwinds?
Oh, absolutely. If you zoom out and look at the Indian market, the conditions are, well, pretty favorable for a company like Dreamfolks. India's credit and charge card market has been booming. It grew almost 28% in 2023, and then get this, 153% in 2024.
153%.
Wow. Yeah, reaching 22.3 trillion rupees in spending. And the number of credit cards keeps climbing, hit 111 million by June 2025. That's up 7% year on year.
Those numbers are just huge. Massive growth in digital payments and card usage.
Exactly. And the forecast for 2025 is still strong, around 14% growth, hitting maybe 25.4 trillion rupees in spend. Globally, the forecast is also positive, maybe 7.5% compound annual growth over the next few years for these kinds of services.
So more cards, more spending, more people using digital payments.
It all creates a massive tailwind for Dreamfolks because they manage the benefits programs for, most of the big banks and card networks in India. They're sitting right in the middle of this growth wave.
Okay, so pulling it all together then, what's the main takeaway for you listening? We've seen Dreamfolks put up strong financial numbers, especially on the profit side. They're clearly accelerating this big strategic shift away from just lounges towards a much broader travel and lifestyle platform. They seem to be tackling those competitive challenges head on, particularly the bank client shifts, by doubling down on diversification and enterprise clients. And underpinning it all is this big investment in technology to build a more flexible, resilient, and frankly, more complex business model. It really feels like a company actively reshaping itself.
Yeah, it definitely does. And maybe that leaves you, the listener, with a question to think about. In a world where what we expect as customers, that convenience, that personalization, is always changing, always ratcheting up, how vital is it for a company not just to react or adapt, but to actually get ahead of the curve and redefine what it offers? Is survival about playing defense against market shifts, or is long-term value created by constantly going on offense, constantly innovating your core business? Something to ponder.
Great point. Well, thanks for joining us for this deep dive today. We really hope you feel better informed about Dreamfolks services and all of the really interesting changes happening in that whole travel and lifestyle aggregator space. Until next time, keep digging deeper.